Good day, ladies and gentlemen. In this video I'm going to be teaching you the concept of inversion fair value gaps. Okay, a lot of you already know what a fair value gap is, but most people still do not know what an inversion fair value gap is. Okay, it is also just as we call the fair value gap FVG, this is known as the IFVG. Okay, it's an inversion fair value gap. I'm going to be simplifying it in this particular video. So what is an inversion fair value gap? An inversion fair value gap is simply an FVG that failed. Okay, inversion fair value gap is an FVG that failed. Okay, so if you have a bullish FVG, it implies that your bullish FVG failed for it to become a bearish IFVG. Okay, so if you have three candle system, you already know FVG is formed by three candle systems, and the wick of the first candle does not touch the wick of the third candle. I'm trying to draw out three candles. Okay, so you have something like this. Okay, then you have this right here. So this is a three candle system whereby the wick of the third candle does not intersect with the wick of the first candle, so leaving you with a gap in between. Now that gap that is in between is what we call a fair value gap. So this setup is actually a bullish fair value gap. Why is it bullish fair value gap? You are looking for price to come back to this level and give you an opportunity to actually buy. Okay, so instead of price doing that, price could disrespect this fair value gap, turning it into a bearish FVG, which is also known as a bearish IFVG. Okay, so it becomes an inverse fair value gap, a bearish type. Okay, whereby you now wait for price to do what? To come back to that level, come back to the level, and then give you a sell trade. So a fair value gap that is bullish, once it is disrespected or inverted, it becomes a bearish inverse fair value gap. All right, while a fair value gap that is bearish, once it is disrespected, it becomes a bullish inverse fair value gap. Basically, that's just the idea behind it. So I'm going to go over a few examples. I think I have about 2 examples for you. Just go over a few examples, and then just to make it clearer, just make the idea clearer to you. Okay, so right here we have an FVG around this region. Okay, so let's see, there's an FVG around here. Can you see it? This is a three candle system right here. This is your first candle, quite small, then you have this second candle, and then you have this third candle, and you would notice that the wick of the first does not intersect with the wick of the third. So what are we going to do? We are going to mark out the boundary with horizontal lines. Okay, good. So right there you have your FVG in between. So what do you see happening? Price came back to the FVG and gave us an opportunity to buy. Okay, so this was perfectly respected. This is a standard FVG. You can see the way it gave us an opportunity to actually buy, and price shot up in the upward direction. Okay, now let me give you an example of an FVG. I think there is a part where it was disrespected. Let me search for it, where an FVG was disrespected. I think it's close to this end. Okay, this is recent data, as you can see. So I'm not going back to show you something that's happened many months ago. No, as you can see, this 16th of August. So this recent data, this happened on Friday. Okay, so let me get my horizontal lines. I need 2 horizontal lines. Okay, so this is an FVG here. Most times FVGs are usually disrespected when price meets or gets to a higher time frame PDR. It will be an higher time frame fair value gap, higher time frame, what's it called, order block, etc. Okay, so that's like it gets to a point that could reverse it. So the FVG is just like a manipulation FVG to make people think, oh, price still wants to go bullish, so you enter, whereas it's actually close to the point of reversal. Okay, so you can see this there's an FVG here, okay, but anyone trying to buy from this FVG is going to lose money, okay, because the FVG is very close to a reversal point. All right, but so if you did not do top-down analysis, you might not know that there's a reversal point very close. But besides, greed is even the reason why you would lose money at this point, because the bullish momentum has been on for a while, and many FVGs have been formed that has paid in the bullish direction. So you don't just keep buying and buying blindly, okay. So look at what happened. Price disrespected the FVG. Automatically, once price has disrespected your FVG, it becomes an inverse FVG. So instead of looking to buy, you now start looking to sell. So now, since it's a fresh disrespected level, this is a very high probability trade for you to take a sell trade from this level, okay. There are some traders that this is just their own strategy, okay. You can master this too and make it your strategy if you want, okay. Some traders use this as their strategy alone, okay. They look for areas where FVGs have been disrespected. They try to look at the higher time frame to see what the disrespect was all about. Is it that price has gotten to a strong reversal point, maybe resistance level, support level, supply level, demand level, etc. Once they can figure that out, then they take the trade in the opposite direction once price comes back to that level, okay. As you can see, price came back to that level and treated it as an inverse FVG, giving us a selling opportunity, okay. And this is where price stopped to be continued on Monday. All right, so basically that's what I have for you today. If you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.